electric vehicles, things like that, they all use silver. And so we're going to have a demand push from both the investment side and from the industrial side, because a lot of the industrial uses for silver are things that are directly related to what Biden wants to do. You can't put all your money into one stock or two stocks for that matter, especially if you're down in the juniors and explorers and that. You really need to buy a basket, because if one blows up, and honestly, even in a bull market, there's going to be some that are just not going to work. They're not going to make it. They're going to blow up. Mother Nature didn't cooperate or leave much gold and silver behind, or the metallurgy is too complicated or whatever. So you have to buy a basket. That's the bottom line.
What I love to do is introduce the right people to the right people. I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome. Okay guys, Jay Martin here, CEO of Cambridge House, and I am joined by Jeff Clark, gold and silver analyst at goldsilver.com. Jeff, how you doing?
I'm doing great, Jay. I'm glad you're having this. I always look forward to VRIC every year, so maybe next year we can do this in person.
Yeah, fingers crossed. Yeah, it's funny. As I was prepping for this, I realized the last time I saw you would have been San Francisco, 2019.
Oh, yeah.
At our show there. It's been over a year.
Yeah, that was fun.
It was fun. Yeah, it was kind of wild. It was fun. So there's tons of stuff that I want to jump into with you today. I've got you for about 25, 30 minutes and tons that I want to cover and get your perspective on to share with our audience. The first thing I want to start with is something I've heard you mention before. You've talked about Biden's $7 trillion Build Back Better infrastructure plan. That looked for a little while that it was going to be roadblocked by a Republican Senate. Probably not going to happen. So we're moving forward, and obviously this is going to be financed by nothing but stimulus. So give me your thoughts on that since the last you talked about it, and how you anticipate that impacting, say, gold and silver prices in the near term.
Well, for me, this is one of the themes of 2021. Now that we know the Democrats have won the Senate, they control the majority, the VP being the tiebreaker there. So this is really going to open the stimulus gate. And this is one reason why I think inflation is also going to be a theme in 2021. A lot of people have talked about inflation, myself included, for a long time, for many years, since 2008 and all the QE efforts, and that didn't really result in any inflation other than asset price inflation, right?
Right.
But the difference now is this is on the fiscal side, not the monetary side. On the fiscal side, that means these are funds that are going to be directly injected into the economy, into people's paychecks and things like that. So I think that is one big reason why we could see inflation this year. But yes, Biden, he's going to push these things. Everybody knows this. So I think, he's going to, finish the coronavirus payments and get those up to 2,000. And the last bill I saw was $3 trillion in clean energy and infrastructure. So he may not get the $7 trillion that he wants.
Right.
He probably won't, but he'll get $3 trillion or maybe even more than that. And all that is going to be on the fiscal side, not the stimulus side, on the monetary side. So what that means is, we could see fiscal stimulus and we could also see monetary stimulus like we've already seen. But
right.
With this money getting, this cash getting injected directly into the economy, that's going to be probably a boost for the economy, but it'll also be a boost for inflation.
So there's a debate firing right now among like YouTube channels, podcasts in the macro finance world, the inflation versus deflation debate, right? And but it's not binary like that, one or the other. And so can you help break that down for us? Why is that a debate right now? And why is it not one or the other? How does it segment?
That's a good point, because yes, what we saw in 2020 was huge deflation, and the only inflation we saw was asset price inflation. So you can have two things going on at once. They battle all the time. But I think with the economy slowing and officially going into a recession, actually it officially started last February. That's very deflationary. And of course, the Fed responded, and all central bankers, or most of them, responded with inflationary action. So you had both things going on at the same time. I think the great thing about gold is that it is a crisis hedge. So it's not just an inflation hedge. Because it's a crisis hedge, it can actually serve well in both environments. So I see both things continuing to go on this year. But I think by the end of the year, a year from now at this conference next year, Jay, we'll be talking about how inflation is starting to rise.
Right. Okay. So we touched on one theme impacting the gold price. Gold's had a strong year. Looking at 2021, are you anticipating a pullback or just more of the same? And what other themes are going to influence your forecast of gold price?
Right. There's always corrections. And I think some people that are new to this industry may not, necessarily understand that or like it or welcome it. And when you get to the mining stocks, they're even more volatile. So the volatility, the downward correction can be even greater than what you might see in the S&P 500 at times. So there's always corrections. But that said, I think by the end of the year, again, a year from now, gold and silver are both going to be higher. There's probably going to be one nice doozy of a correction. Maybe it's that's already happening this week. But I think by the end of the year, gold and silver will be much higher. That's the way I'm investing. And, there's a variety of reasons for that. But I just think the price is going to continue in a bull market as opposed to a bear market.
Right. Okay. And just for context, it's January 8th today, whenever you're viewing this piece of content. So I want to talk about the silver sector a little bit with you, Jeff. And let's start with the demand side of the business. Silver Institute put out some research that I think forecasts stating that generally speaking, 10% of demand for silver is derived from investment, the balance from industrial uses. Last year was an extreme outlier, 50% of silver demand coming from silver investment. Now, do you, first of all, what was driving that? And do you expect that ratio to continue? And is it for the same reasons that you forecast similar for gold?
Right. That's good because silver didn't respond at first last year. Everything sold off in March. Gold rebounded almost immediately and started up and had a nice run. Silver did not rebound immediately, and I think that caused some consternation with some silver investors. But this is very normal. Gold always leads in periods of crisis. Silver does not. Gold leads. Silver catches up. And boy, did it catch up. It rose 140% from its March low to August high. And it was the number one performing major asset class last year, not gold. Silver outperformed the NASDAQ. The only thing that did better was Bitcoin. So, silver tends to follow. That tends to be its DNA with gold.
Okay. Now, if we're looking at $3 trillion in stimulus for clean energy infrastructure, maybe just looking at solar, but across the board, it does dramatically impact the demand for silver. I think a lot of people don't realize how small the silver supply is. What are we looking at? Like, is it 800 million ounces a year, Jeff? Does that sound accurate?
Yeah, probably 800, 850 now. The interesting thing, it's been going down a little bit every year since 2014. And we're talking about new supply here. But of course, silver is different than gold in that, anywhere from 20 to 30% of that gets used up every year and is not recyclable simply because the price is too low. There's no economic sense to do that. So, supply is rolling over and demand was up last year. I think those are trends that are definitely going to continue for the foreseeable future. And there's multiple reasons for, the supply falling, but that's a trend in motion that's going to continue for some time.
Okay. And what other demand factors are you paying attention to right now?
Well, investment demand, this is a great question because not only is investment demand going up, but now that we're going to have all this stimulus coming through the economy, a lot of these things that Biden wants to do, infrastructure, clean energy, electric vehicles, things like that, they all use silver. And so we're going to have a demand push from both the investment side and from the industrial side, because a lot of the industrial uses for silver are things that are directly related to what Biden wants to do. And so we're going to see continuing increase in infrastructure and industrial use, and also investment use, especially if we do get inflation, like I think we will. And so you're going to have two rising major trends in demand for silver, and yet supply has rolled over and is in decline. And supply can't easily reverse until silver prices are much higher and incentivize miners to build more mines, do more exploring, do more development and things like that. So there are some new mines that are going to come on this year and years going forward, but to really dramatically increase silver supply and reverse this trend, you're going to have higher silver prices.
Do you think that's a bit of a sleeper in the market? The only reason I ask is because when I have conversations like this and I talk about the renewable energy trend and the clean energy infrastructure, the conversation always goes to the same place, and for good reason, but it goes to copper, nickel, maybe to lithium, and far more infrequently. I'm not saying it doesn't come up, but silver comes up far more infrequently. So do you think that's something that people are overlooking, or is it just, why do you think that is?
Copper is a bigger market than silver, and it is used a lot in some of the things that we're talking about. So copper use is going to go up in this environment, but the copper market is so much bigger, and with the silver market that much smaller, again, any kind of jump in increase in demand, and you're easily going to see the silver price react more than you would the copper price, simply because it's a smaller market. You brought that point up earlier. The numbers are outdated, but I remember doing a chart last year. The amount of cash that silver has, the amount of cash that Apple has, is like 90% more than the last year's supply. So, there's many examples of that. I don't have the exact numbers in front of me, especially when you look at the silver equities, the primary silver producers. Apple has more cash than all of them combined. So this market is really, really tiny, and it's small, and it just doesn't take very many funds coming into it to impact its price. And I think that's a reality that we're going to see going forward. Okay.
So it's a bullish outlook. And, in my experience, as a resource market heats up and investors become more enthusiastic, all the noise and distractions increase as well. And a lot more deals get listed that aren't worth your time. And there's a lot more landmines for investors to step on. So, Jeff, in your experience, what are the most common mistakes that retail investors make as a resource market is emerging?
That's a good question. I use my own screening process, as a prior mining analyst, and what we used to do, Louis, James, and I at Casey Research. So I think the biggest mistake I see people make is they'll look at one part of the elephant. They'll look at a property that looks prospective and they'll get excited about it and go out and buy it. For me, that's just one step. You have to look at the management, the team that is behind this project, because management can make all the difference in the world. As we used to always say, we'd rather have a mediocre project with top management than a top project with mediocre management, because they can navigate through the trials that are going to come up. This is mining. It's not easy. It's not, just create a microchip or something like that. So you have to look at the management, and you have to look at the politics, in my opinion. So you have to look at the jurisdiction where the mining is taking place. There are countries that are just off my radar. I'm just not going to invest there because I've been burned before by that. And then you look at the property, and there are a lot of other things I look at too. But the idea is you want to look at the whole picture of what this company has and where it's at and who's behind it, who's supporting it, and make a decision based on that, as opposed to just one aspect that may look exciting, but maybe it's not as exciting or as prospective or as compelling when you look at all the factors. For me, that's how I approach it, and that's how I encourage other people to approach it as well.
Okay. So you touched on jurisdiction. I want to pull on a thread there just quick, because I'm seeing jurisdictional risk becoming more and more significant when people are looking at projects. And the number you said, there's some countries that are just off my radar. And could I guess that the number of countries that are off your radar is increasing, whether or not it's because of political instability or the ESG movement maybe making source country far more important for investors than it used to be?
Yeah, that's a good point. That's a trend in motion, and that's going to continue. And for a large part, Jay, that's actually a good thing. We want responsible mining here. We don't want irresponsible people that don't clean up after the mine and that sort of thing, and respect property rights and First Nation rights and all that kind of thing. Okay, so but it's getting to a point where it could interfere with some mining, and if I deem that is something that's going to interfere with the project, or a mine getting built, or production actually beginning, or the government letting production begin and then jumping in and changing the tax structure, that's an issue for me. And so I don't go down that path. I just avoid it. So there's the number of jurisdictions that I personally would avoid is growing, and the number that I include is getting smaller. So for me, it's most of Canada, Nevada, probably Idaho, some places in South America, but definitely not all places in South America, things like that. So that's a really good point. Some of this is good, some of it's overreach. And if I look at a government, I have to ask myself, okay, do I trust this government? Are they going to have overreach or not? Or can I trust them? Are they pro-mining or are they pro-government? If they're pro-government, that tells me I'm not going to stick around or not even invest at all.
Yeah, that makes sense. Okay. Well, thank you for sharing that, because the number of companies that'll be raising money and promoting is likely going to increase in the next 18 months. And investors, that have those hard, fast rules, maybe areas I just don't look at, my management team rules, whatever that is, it helps you cut out 80% of the noise. And then you can start to get serious about that remaining 20% that are significantly less risk, more upside, et cetera.
Absolutely. There's 1,000, there's going to be 2,000, 3,000 juniors out there before this is all over. You need to be able to eliminate 90% of those and then take the remaining 100 and zero on the very best stories. Really, this isn't that hard when you look at it from that perspective. Even Rick Rose talked about this. John Hathaway's talked about this. If you focus on just the very best opportunities from a complete perspective, then you really you not only reduce risk, you give yourself the best chance of succeeding. And so that's what I try to do as well. Okay,
well, let's talk about some of those projects that you like so much. I want to peel some stock picks out of you if I can, Jeff.
So, okay. Well, a couple things first, if I could say about the mining equities, is first, they're still very, very cheap. Almost anyway, they had a big rise last year. My personal portfolio did very well. So they've risen a lot, but still on a historical basis, they're cheap. Whether you compare mining stocks to gold, whether you compare them to the S&P, whether you look at the forward PE, all of these indicators still show that mining equities are cheap on a relative historical basis. The other thing to keep in mind is free cash flow is going to dramatically increase this year because of higher gold and silver prices. Today, notwithstanding, gold and silver are selling off pretty hard. But for the year, on average, with prices higher, free cash flow is dramatically going to increase. So, and then the last thing is there's been a lot of underinvestment in the industry for the past 10 years or more. There hasn't been as much funds and cash going into exploration, development, expansion, all that. And so if you look for less gold, you find less gold. So if you spend less looking for gold, you find less gold. So that's the reality that we're in right now. And so the majors are going to have to look for, there's going to be M&A in the industry. They're going to have to look to replace ounces and continue to grow their projects. They have to, a major that produces 1 million ounces a year has to find 1 million ounces a year just to stay even, not grow, just to stay even. And so the more attractive properties out there, projects that are out there, those are going to get bought up. And so there's some really good ones that I like. So
before we jump into them, then just a follow-up question to that point, do you think there's some pent-up demand? This has been a theme in the conversations I've had this week, with the travel restrictions, et cetera. We can't travel, kick the ground, and go deep on projects. So do you think there's some pent-up M&A demand right now in the market?
That's a good point. Yeah, because again, even though production's down a little bit, they're still producing metal. And so there was M&A in 2019. There was M&A in 2020. I expect it to be even greater because this trend is the snowball's still rolling down the hill, right? They still need to replace ounces. And so I think this is going to be a theme for 2021 and frankly, for probably several years, the need for majors to replace ounces. Absolutely.
How important is it for you when you're looking at a junior, Jeff, that you can see, or hope to see a clear path towards an exit? This is a project a major will want to acquire. Is that a key piece of criteria for you?
That's a good question. I don't look at a junior or explorer or developer or whatever and say, "Ooh, this could be a good M&A target." It may be, but that's not my criteria. My criteria is who is the management, where is it located, what is the property, how prospective is it, how complicated is the metallurgy, 100 questions you might ask. So I'm looking at that. The exit plan will kind of take care of itself, right?
Sure.
And frankly, I hope that the M&A doesn't take off too quickly because I want to get a 10x on a stock before it gets bought out, right? I don't want to be bought at a 30% premium. Yeah. I want it to go 2x, 5x, 10x, and then get bought out at a premium. So I hope this process doesn't take off too soon. But again, something that's an M&A target, I don't start with, okay, what's a good M&A target? I start with the basics and then let the exit plan take care of itself, whether they develop it themselves, whether they sell it, whether they get bought out, whatever that case may be. If you start with the basics, again, I think your risk is lower and your upside is even more protected.
Okay. Yeah. So let's get into some names. Who's got your interest right now and who should my audience take a look at?
Well, full disclosure, I own everything I'm going to say here, but I own a lot of stocks, but these are the ones I think that are best right now here in January 2021. On the development side, I really like Marathon Gold. They've already got 1.8 million ounces in reserves. They're up, got a 12-year mine life. There's room for expansion. That mine will be developed, so this is a good time to get into that stock, in my opinion. So on the exploration side, which is kind of what I like to look at, I have 3 golds and 3 silvers. On the gold side, Liberty Gold is definitely a keeper, in my opinion. The stock has run up a lot, but that's definitely a buy. I think they're onto something very real there up in Idaho. Their Black Pine project, it was a past producing mine. They're going to make this even bigger and better. That's definitely a buy. I also like Go Gold. They're developing a project down in Mexico that is actually going to fund further exploration when they put this smaller project into production. There's a PEA and a resource estimate this year coming, so that's probably a good stock. I like that. And then the third one would be Maple Gold, which is off a lot of people's radar. It's a project up in Quebec. It's been around for a while, but it's similar geologically to the Canadian Malartic mine, which is one of the largest, highest grade deposits in Canada.
Yep.
And yet this deposit, what they're looking at, their drill results so far are actually higher grade than Canadian Malartic. So we'll see if that continues. It is speculative, but I do like that. Agnico Eagle came on as a partner. Fidelity bought 18 million shares this year. A lot of drilling this year. And the former execs from Robert Friedland and BMO are involved in this company. So you add all that up, and there's a lot of people that are, very interested in this project. On the silver side, I definitely like Discovery Metals. They're sitting on already 1 billion ounces of silver equivalent down in Mexico. They're still drilling. There's going to be a resource estimate there this year. This is definitely a keeper, in my opinion. This is one to ride probably to the top of the market. Another more speculative play would be Reyna, Reyna silver. That's a good one. One of the top geologists in Mexico looking at trying to find where the starter vein is there for that project. So I really like that one.
Yeah.
And then the last would be GR Silver, also down in Mexico. It was a past producing mine. Looks like there's a lot more underneath that area. That's still a buy, in my opinion. So those are some of the ones that I really like. And I, again, full disclosure, I own them. Some have run up, so only buy in pullbacks. But those are ones I think that I'm personally pretty excited about.
Yeah. Okay. Very cool. Well, and we've had Marco Day on the show 4 times in the last year. You mentioned Liberty and Discovery. My audience is quite familiar with anything that comes out of the Oxygen Capital camp. And similar to you, like I always start with the people. Mark's one of my favorites in the business. And Cal Everett. I mean, I'm talking to him today as well at Liberty.
Right. And I did own Mark's Pure Gold. I think it went 5X for me or something like that. I did take profits at first pour. That's something Louis James talks a lot about.
Yeah.
Taking profits at that point. But I still have a full position in it because they have a 7-kilometer strike there. They're still exploring, so there's probably a lot more upside there.
100%.
But, taking profits after that kind of gain allowed me to buy 3 or 4 other stocks. So that's why I do.
Well, I want to talk to you about taking profits as well, because, we all talk about what to buy and when to buy, but I lose more sleep over when to sell and how to sell. So I want to talk to you about that. But before, any companies that are on your watch list. So we've mentioned 3 gold, 3 silver. You're positioned all of them. All good stories. I'm familiar with all 6. But who are you watching right now, Jeff? That you're not endorsing and you haven't taken a position in, but they're on the watch list and you're paying close attention to?
Well, I'd have to log in and look at my portfolio and see what I'm actually bidding on. There's probably 6 or 8 more I'm still yet bidding on. But one you might want to look at, Prospect Generator, is Midland Exploration.
Oh, yeah.
That's a good Quebec explorer. And it's not just gold and silver. There's some base metals there, some REEs there. But they have multiple JVs. The stock's in very strong hands. They have no debt. There's tons of drilling going underway right now.
Yeah.
More JVs are coming. So that's one there. I have several Prospect Generators, but that one piques my interest perhaps as much as any of them do. It's
been a strong year for Idaho with Midas and Liberty.
Yeah.
And so, I know it's been a tricky jurisdiction in the past to work with and get permitted in. I don't know if that's been your experience. I guess I've just watched the Midas story unfold and now it's moving forward. But are you bullish on the state in general? What are your thoughts on Idaho?
I think I'm bullish. I'm more bullish on the state than I used to be. You're bringing up a good point. They weren't always the most pro-mining jurisdiction or state. But I think, getting the revenue from that is something that state might be looking at, the government officials. I don't know. But how I look at it is they're not anti-mining. And I'm going to ride Liberty Gold, for one example, as long as the state behaves. Let's put it that way. If we start to get inclinations that, hey, they're starting to clamp down, or they're going to delay permitting, or want to add taxes on, or royalties and things like that. If we start getting winds of that, I will lighten up as much as I like that stock, simply because of the political jurisdiction. So it's nice to be able to talk about some jurisdictions that have actually gone a little more pro-mining than less pro-mining, right?
Yeah.
Because most of them have gotten less pro-mining, not more.
So, okay, that's a great segue into our taking profits question, because it can go either way, right? Price performs, you've hit your target, maybe you still love it, but you do de-risk a little bit. Alternatively, things don't go the right direction. In the case of, say, Idaho, something changes at the state level and all of a sudden it's not as favorable. So talk to us about exiting a position, Jeff, for positive reasons and negative reasons. And let's maybe start with the negative. Well, yeah,
the negative reasons are obvious. Everything happens that it greatly impacts the stock and makes it sell off. Even if you're at a point where you have to take a loss, you might have to do that. Because if the negative reason is a political jurisdiction that's becoming more onerous or more intrusive, then that's not something that's going to resolve real quickly, and you'll have to exit. If a top manager leaves a fund, leaves a company, that would be another reason that would make me perk up. So whatever the negative reason is, you might have to exit, even if it's with a loss, just because some of those are reasons that, we're getting hints from things, right? We're kind of like a detective. You're trying to detect, okay, what's going on here? What's happening? What's the trend? And we need to make decisions based on what we see happening and what these hints are. And if you get a hint that something, is not positive, then you do have to exit.
Okay. Yeah, I'm with you. And it's harder to do though, isn't it? We're speculators, want to be optimistic. You want to be right. And you don't get the news you want. There's always a part of me that wants to say, but maybe this was
right. I've been there. That's for sure. Yeah. And that's a good point though, Jay. We are speculators. We're not really investors. I don't look at it like that. If I'm going to invest, I'm just going to buy gold and silver.
Yeah.
But we're speculators. We are speculating. So you need to keep that in mind. And the second point about that is this really argues for why you need to buy a basket. You can't put all your money into one stock or two stocks for that matter, especially if you're down in the juniors and explorers and that. You really need to buy a basket because if one blows up, and honestly, even in a bull market, there's going to be some that are just not going to work. They're not going to make it. They're going to blow up. Mother Nature didn't cooperate or leave much gold and silver behind, or the metallurgy is too complicated or whatever. So you have to buy a basket. That's the bottom line.
Okay. So to wrap up, last question then. Things went well. We've generated some profits. Why should we consider a selling strategy as opposed to just hitting the bid and getting out as fast as we can?
So I don't sell. Now, the difference is I take profits. So we'll use pure gold as an example. It went up 4 or 5x, I don't remember. So at first pour, that was my time, my signal that, okay, it's time to take profits. So I took profits. So I sold some shares, but what I mean by take profits is I scrape off, a lot of that excess profit and I leave myself exposed to the stock, assuming it's one that I think I still want to own and it's going to do well in the bull market, something I want to own maybe even to the top of the market. That's the case in pure gold. I still wanted exposure. So a lot of times I don't sell out. I still continue to own shares, but I take profits. And what that does is it locks in a profit for you and it gives you funds to buy other opportunities. And that's how you grow your wealth, is taking that, excess cash and spreading it out into 2 or 3 other plays or whatever the case might be. So that's just how I do it. And it's worked well, the past couple of years. It worked well in the 2009 to 2011 period. So I think if you're in a bull market, that's one way you can grow wealth. Keep some exposure, but take some cash off the table and use that for other opportunities, because there are always going to be other opportunities in a bull market. Just this week, there were 2 opportunities I wasn't aware of that made my eyes perk up and I need to take a look at those. Well, if you never take profits, you don't have the cash to go into other opportunities. So that's how I do it. And that's how I like to build my portfolio and frankly, grow my wealth.
Yeah. Because there's a new bus every 15 minutes, isn't there? Okay, Jeff.
There'll be a new bus every 5 minutes when this thing really heats up. That's what you got to be careful of. But again, just go through your screening process and only go for the strong ones. That's the best advice I could give anyone.
Love it. It's a great place to finish. Look, it's been great catching up with you. I'm super glad we got you back on the show.
I'm glad to be here, Jay. I'm glad to do it. I love VRIC. And like I said, can't wait till we're all back together again. I think this is going to be a good year for us, despite what's happening today.
I'm with you.